Today is Tuesday, December 27th, 2016, and not surprisingly, as I left off my prior video, I talked about how I expected this week between Christmas and New Year's to be very quiet, without much activity, probably some narrow, tight ranges with very little action. And sure enough, the first trading day after the holiday weekend, within the first 15 minutes and really the first 30 minutes, it was straight up pretty violently, especially on Nasdaq. NDX had a really large move in just the first half hour. So that shows you what I know and how my predictions go. But there was quite a reversal in the afternoon, and S&P actually closed. Well, I guess it was up for the day, but it was definitely lower than the open. And Nasdaq did not quite get back to the open, and neither did Russell. So they were both up a little bit, but not nearly as much as they were in that first hour of the morning trading. But before I look at NDX, which definitely put my position under pressure, I'm going to start with gold because I haven't looked at that in a little bit. And so from several videos ago, I went through and I analyzed each position and have all the simulated trades in here, which you can see there are quite a few. And so thus this is an accurate P&L, so we're about 27 or 2800 to the good out of a potential credit remaining around 57. So we're right here at that 50% mark. And there are 30 days left in this contract, these options. And so I am, once again, in a take profits, close this trade out mode. And since I have some room, I'm willing to let it sit here a little bit. But I'll show you what the positions, if we hide the simulated trades. So I have 6 calls, verticals up here, the 1200, 1210. So that's this little kink in the line there. And so those are fairly close. I think they're around 80 cents right now, and I've got an order in for 40 cents to buy those in. And then after those are gone, what I'll have remaining are 2 naked calls here, 2 naked puts here, and a naked put there. And then I've got an order in to take these 2 as a strangle. And so right now it's priced around $11.30. So I have an order to buy 1 strangle in for at $10 right now. And then if I can, I might take the other one for $7.50. Trying to get it all the way down to 5 seems like I'd have to stay in a little longer than I want to. And we'll see how that goes. But yeah, I definitely am willing to take some profits on this very soon, since gold has been in a pretty large downtrend and then has become sideways for the last couple of weeks. So since I was able to get some money back out of this position after fighting it, I don't feel like pushing my luck too much. So yeah, so if I close that strangle, close that call spread, then I've taken quite a bit of risk off, and I'll be happy to close that position off. I do have a trade on bonds, which I don't think I've shown. It's very similar to my other positions. This one is just a straight strangle with 2 short calls up here, 2 short puts up there, down there, and it's right in the middle, making money. Not much to do. I haven't touched this thing at all. I barely look at it. And they're still in this bonds position. There are 59 days to go. So not really much concern there. We're not quite to the halfway point. I probably could take buying one of the strangles at the halfway point, but we're not there yet. So don't really need to do anything with that. So the NASDAQ January butterfly. So this was looking not so good this morning, and it was we were up here close to 5,000. I can't remember exactly what the high of the day was. Let's find out. If we look at NDX, the high of the day was 49.92. So yeah, that was definitely well above this 49.62 prior high, where I was hoping we would limit. So you can see what happens when we were, around here at the close on Friday, and this definitely looked like that steep of a slope. But this thing was down around a little over $3,000 at the peak this morning, and I was willing to give it just a little bit of time and see if it would reverse. And luckily or thankfully it did. But I had this order in, and I was very close to just pulling this whole thing off. In fact, I think at one point I basically had put $110 was my line in the sand, and so it was trading 109.50 or so. So it was really close, and I was just getting ready to pull pull the plug, and unfortunately, I would have taken $1,000 loss in about half an hour, which is what can happen on these positions, especially as you get closer to expiration, which is why I've said many times I don't like to get this close to expiration, because even here 3 weeks away, it was $1,000 in half an hour. And so, if in the last few days, the last 2 weeks, the last week especially, a $40-50 move in the NDX, which can happen in 15-20 minutes or half an hour, that could be several $1,000s. I just don't want to swing my account that much. So I could argue that I was a little negligent, because I went downstairs and I was helping make breakfast with my son, and I had the phone in my pocket and was listening, but I really wasn't watching the numbers. And by the time I looked down after 20 minutes or so, the NASDAQ was much higher than I expected, and so I ran back upstairs and started watching it. So probably not ideal trading for my process, but unfortunately, fortunately the NASDAQ came back and the profit came in, but that is not that's not a good way to judge your trading. You cannot judge your trading performance based on the outcomes. So the outcome was positive, but my process was poor, because I really should have been more diligent and in front of the computer or watching my phone and ready to execute my orders. So all that is to say that all I have left is this. This is how I'm going to close it. I've got this one call spread and the 2 put spreads, so I can just take this whole thing in one big order and not try to leg out of one side or the other and risk the market moving. So I've just closed this whole thing out. I've got the order, I think I've got it in at 90 right now, which I don't think I'm going to get it at 90, but it's really just there to keep an eye on the price. And I will be watching it very closely at the open tomorrow morning, and if it starts to move back up, then I'm just going to pull this thing. And if I am finished at about minus 2,500, then I actually will feel like I dodged a little bit of a bullet, because it could have been easily 3,500 this morning. So we'll see what happens. The February position looks like so. Again, it actually made some money, because it still has a few long. It's on the longer side of the neutral position. It's still pretty close to neutral, but it has a few positive deltas. So the February position made a little money. The January position lost a little money. So that's one of the reasons you can structure these positions like this, where you have offsetting, you get a little bit of diversification from SPX, NDX, Russell, because they don't all move the same. As an example, the NDX was up almost 1%. They closed the day at about up 0.5%. SPX was only up about 0.25%. And this is wrong. It wasn't zero. They resets after hours. So Russell was obviously somewhere in the middle. Look at that. The Dow Jones was only up 0.06. So so there is some variation, and there is some variance in how these equity indices move. So because they don't move exactly lockstep, you get a little bit of diversification in these neutral strategies. And then you can also, like I did, I've got one strategy in January, which is quite a bit differently. So basically my February position is more bullish. The January position obviously is much more bearish. So you can play those two against each other a little bit, and there you can get a little more diversification there if that's what you're looking for. Russell, very similar story. Essentially need this to, don't really need it to go down. That'd be nice. But the main thing was just don't want it to go up. We really don't want to see it break all-time highs and then start, to rally hard. It's really need to keep it below those 1,400. And so the way I'm going to close this, as you can see, I have 4 put spreads, and then I've got this little bit of a wonky situation here. But I've got a 20 point wide call spread and a 10 point wide call spread. So I just created 2 separate orders. Here's the 1,400, 1,420 with then 2 puts, and here's the 1,410, 1,420 with the other 2 puts. So if I eventually close off both of these positions, my entire position will be flat. So I'm going to work these orders in this way, and we'll close one of these, and we'll obviously reduce our delta and theta down and make it fairly flat, take some risk off, and then we'll just close the other one. So as you can see, maybe you're asking, well, which one of these should I do first? So this one, my delta theta, but I've got 10 to 20 basically, so it's about a 50, or 1 to 2, about 50%. So that I don't like so much, because that is obviously much more of a bearish. That's a bearish opinion basically, if you want to have that position on. Whereas this one will get me down very, very closer to neutral, which I prefer. And then you could say, well, sure, maybe you don't like the 2-to-1 delta Thadio, but I've got a more than a 3, almost not quite a 3-to-1, so that's a fair point. So this is actually more bearish than I really like, which is one of the reasons I would take this off to cut that down. And that was another reason I had my eye on this very, very closely this morning, and I was very, very close to just taking this whole thing off. But I held on to it, and the market backed off. We'll see what tomorrow holds. SPX, January. Oh yeah, I had these, and there's another potential mistake that I made. So I had a long-term order in to buy these back at 45 cents, and the market gapped up slightly, and the futures were up overnight, and I did not go in and change my orders ahead of the market. I really should have, because I doubt I could have got it for 35 cents, but I probably got it for 40 cents. And this was a 10 lot, so that's $50. I probably cost myself $50 by just not paying attention and changing my order. So that is a mistake. Those are little small mistakes that you make that add up over time. So that's definitely me not being diligent and double checking my orders before the market opened, because this filled immediately at 6:30. Let's look at so this filled at exact 6:30 and 04. So which basically means they probably would have taken it for less than 45 cents if it filled that close to the open. So that's a bit of a mistake. As far as management, same old story. SPX didn't rally quite as hard, so it didn't. Well, that's not true. It was up here. Yeah, it was starting to give me a little bit of pressure to the upside, which has not been uncommon this year, really, and especially since November. The upside has been the risky side, has been the hard side to defend. So same thing, just hope it stays in this whole area. If it starts to move out of my range, close the calls, close the puts, and take this thing off. And February, there's just absolutely nothing to do here except to keep this order, watch this order for these puts to come off. So they're down to 60 cents from 45. And then when those are gone, we'll have a position that looks like this, and it will just be a matter of taking off this little structure. And I think I will keep this extra put on. But look at that. So once we take off this 10 lot of put verticals here, we've got this nice swoopy downside. There is pretty much, we really can't get hurt that bad in a sell-off. And if you look over here and you think, this is just in case you're not familiar how this software works or how these models work, you can say, oh yeah, I mean, heck, you could lose $11,000. That's pretty catastrophic when you're up 1,000 and you're only trying to make 2,000 or 3,000. But what happens, you can go in and model these things and don't know exactly what would happen to volatility. Right now, volatility to VIX is around 12, so the volatility is really low. And if we got some sort of massive 10% move down here to 2,000 in just a handful of days, volatility would easily be 25, probably 35 or something. So if we it would be conservative, we can just crank this thing up 10 volatility points. I mean, so look what happens. So this extra put that we have down, the extra long put down here, just absolutely explodes in value. And so now down here where it was showing us we might be down 11,000, well, we're just down a couple of thousand, if that. And this is, I think, fairly conservative on the volatility adjustment. If it was closer to 20, heck, we might even be up money. So that's why you have extra long puts and extra insurance for these big, large downside move, black swan type things you might call them. Which, just as a little aside, I find amusing that if there was a 10% sell-off in a handful of days or a week or two, you would have panic and huge news and people talking in front of Congress and whatnot. But if you see something like this, which has been about 9%, that was a 9% rally, over 9% rally in less than a month. That's no big deal. That's just to be expected. And then you look at something like Russell. So Russell had a 20% rally, 20% rally and 25 bars. So it's almost a percent a day, and that's no big deal. Hey, market rallies 20% in a month. Sure, yeah, that makes sense. No big deal. Down 20% in a month. Hey, who needs to get fired? Who needs to go in front of Congress and explain what's wrong? Why did capitalism fail? It's just the bias of people who are long only. And as someone who trades both sides of the markets and enjoys seeing some down days on occasion, it's a comical just to have that perspective that no one complains as the market rallies incessantly, except for people like me and active traders, and then everyone gets hysterical when it drops a few percent. So that's just a little extra tidbit I'll throw in there for today, and that's it. It's getting pretty boring. Just winding things down, taking things off, not looking to add anything else. I have other activities and things I'm pursuing, so trading is becoming less of a focus, and I'm hoping to spend less time on it here for the remainder of the year and the early part of the next year. I can elaborate that on another video as I recap what happened this year and project what I would like to accomplish in 2017. But as far as the management side of it goes, not much to do. It's really just to close out these things, and the one major thing I need to watch personally is I have a tendency, as I did this morning, to try to hold and wait and hope for a reversal. And so as I did this morning on NASDAQ, because you have that incentive that if it'll just reverse and come down here for a handful of days, I can make another couple of $1,000s really quickly. And that is that's a really strong pull, to just wait and try to be patient and let the time decay go by. But man, if it had kept rallying really, really hard and then gapped up tomorrow morning, I mean, I could have given away a lot of money. And so that is one of my major weaknesses and trading mistakes that I'm working on. And so I honestly, in retrospect, I think I traded poorly this morning. I really probably should have just bailed on this thing after the first 5, 10, 15 minutes and just taken it off for, I don't know what the price would have been at that time. Maybe it would have been a $2,500, $2,800 loss. But that was the better trading decision to make. And the fact that I held and the market reversed, I mean, that's just luck. And like as I said earlier, if you judge your performance based on the outcomes when you do something silly and you get rewarded, you're developing bad habits, and you will get punished eventually. That will catch up with you. So overall, I think I could have dropped my price before the market opened. So overall, I did not trade well today. I had a couple of mistakes. So I judge my performance to be not great, and I will improve tomorrow. And I will focus and watch and have a clear line in the sand. And once my line in the sand is crossed, I will execute my orders without hesitation, and I will close my positions, and I'll be grateful for the way that the year ended. And even if this position doesn't make a lot of money back, that's okay. As I talked about earlier, I'm content and happy with where we are, and so I will just take my positions off. Be glad that I've not have more risk exposed, and move on to other positions and bigger and better things. So thank you very much for your indulgence, and look forward to another video tomorrow.